market continues to rotate, and with the AI trade unwinding, Wall Street's trying to figure out where to park their cash next. But with Costco erasing all of its gains year to date, let's figure out if this stock is a defensive buying opportunity or a bull trap. So let's go. Hit subscribe and turn on all notifications if you're ready to print in 2026. And shout out Nancy for the idea on today's video. Keep leaving your comments below and what you guys like to see next. Costco is a company that needs no introduction, and when I still tried to go to the one near me, I can't even find a parking spot. And it's really interesting when you walk into the store, you'll notice that all their inventory and staff are fully packed. So they're definitely not experiencing any type of slowdown. They posted another really strong fiscal year with total comparable sales growth growing at 5.7% across all their business segments. And they continue to be the gold standard for customer retention with over a 90% renewal rate on their subscriptions, which is really healthy to see. And not only are they growing the number of people that come into the stores, but they're also growing their physical store footprint across the globe. So management is well aligned that they know their business is going to continue to grow, and all they have to do is just keep hitting copy and paste and watch the money come in. So with the context in mind that Costco continues to grow their sales across all of their lines of business and geographies, why does the stock continue to sell off? And is this a matter of the fact that Wall Street is pricing in a sales downturn in the future, or is it because there's a big unwind in the stock market right now, specifically in high valuation names, and investors are starting to wonder where do they park their cash in a defensive sector to weather any sort of AI explosion? Okay, to get to the bottom of this, we're going to run a couple of comparisons. So the first thing that I'm going to do is I'm going to add the next 12-month price to earnings ratio to see how forward valuation has trended over time. And zooming all the way out here, we could see that Costco is trading at 45 times next 12-month earnings. And that's off of a peak of 58 times all the way there on the right-hand side of the chart. And we're retesting the prior swing high all the way around that 45 times price to earnings ratio. And zooming in here, if we look at the 1-year chart, Costco continues to be in that downtrend. But what we really need to do here is compare it to what's going on in the overall stock market. More specifically, if we compare it to the largest company in the planet right now, which is Nvidia. This chart is really remarkable right now because Nvidia is actually trading at a discount compared to Costco. And that's really interesting because when you think about what Nvidia does versus Costco, Nvidia is arguably a more scarce company right now, meaning that their product has way higher demand. So if we just start with the base assumption that Nvidia should be the gold standard for the most valuable company on the planet, through that perspective, it is really interesting to see that Costco is actually trading at a premium. Let's not stop the comparison there, because if we actually plot a competitor to Costco, and everybody's very familiar with Walmart, it's actually the same story. So once again, Walmart is actually trading at a premium to Nvidia. And drilling in just one more time, if we look at the S&P 500 sector of consumer discretionary, where Costco and Walmart are supposed to trade, which is all the way down to 26 times, which is more in line with the overall market. So that's what I want the focus of today's video to be, is to figure out, is Costco's premium justified? And at least at today's trend, it does look like that's going to continue to trend to the downside. Over the past 5 years, on the right-hand side of the chart, Costco has grown their top-line revenue at a median growth rate of 9%, which is really respectable for a company of any size. But we're going to run the same study. So if we actually plot this against Nvidia, remember that Costco is trading at a very rich premium compared to the largest company on the planet right now. Looking at Nvidia, you're going to want to cover your eyes, Costco holders, because this chart is definitely not suggesting that Costco should be trading at a premium in terms of relative valuation trading, because Nvidia has been growing the revenues at 68%, which I don't think I need to do the math there. That is significantly above what Costco has been able to achieve. And I just want to reiterate that I know that Costco and Nvidia are two completely separate companies, but the point I'm trying to make is, if you are an Nvidia investor, or if you're concerned about the AI bubble exploding in general, why would you trade down a stock like Nvidia that trades at a discount and roll your cash over into something that is not only growing slower, but is also trading at a higher premium of almost over 10 turns compared to Nvidia? That really just doesn't make sense to me. And I think that's what the market is also trying to figure out, is where to park that cash if you're afraid of the AI bubble, widening out what we just talked about. And if we look at all the way from sales, gross profit, their operating income, down to net income and EPS, since they just reported their full year fiscal 2025 results, everything still looks incredibly healthy for this company, and it should be no surprise that they're only expected to continue to grow out into the future years, all the way to the end of the decade. If I scroll to the right hand side here, so that's still really supportive of Costco's overall long-term vision, which when we have a look here, and given the fact that they are supposed to grow double digits over the next couple of years now, and we look at their forward price to earnings ratio out a couple years, all the way to 2028, they're still trading at 36 times, which once again is still well above the market average multiple. But when looking just specifically at Costco, it would be on the low end of their valuation range. If you found this video valuable so far, hit that like button and share this video with your friends, as we're going to go over the chart next. And notice that over the past couple of months here, Costco has been selling off towards the blue line on my chart, which is the 20 exponential moving average, and that's going to act as a key area of support. If we look all the way back to 2022 and 2023 on the left-hand side of the screen, that's where price had bottomed historically, and that's going to be a magnet. And this isn't the first test of the exponential moving average over the past couple of years now. If we zoom out one more time, sticking with the monthly chart, every time that price had bottomed at the exponential moving average, that had been a really good buying opportunity and something that I'm going to keep my eyes on, as that's going to act as a very key level. And scrolling all the way back to some historical lows that Costco has made all the way back in 2000 and 2009, I want to draw everybody's attention to the bottom of the screen there on the dotted blue line, which is the 100 period simple moving average. And that's actually the key level that I am most interested in. As you can see, during times of economic slowdown, that indicator has acted as the actual bottom for a large sell-off in the stock, which I'm not proposing will happen, but it is important to know that this is what price has done historically, and it's something to keep our eyes on going forward. So I'll mark those areas on my chart as we continue to follow Costco's story into 2026, which I encourage you guys to check back for future updates. Scrolling all the way back to today, that same indicator is at $470 a share. It's interesting to see how bullish forecasts are for Costco out until the end of the decade. But then when you compare that to the next 12-month price targets on Wall Street, you have analysts putting out numbers all the way as high as $1,200 down to a low of $600. So there's a very wide range of consensus targets out there, and that kind of ties into the confusing theme of where do investors go to technically hide in this market if they suspect some trends are starting to deteriorate. That's where I'm going to end today's video. I plan to make updates on Costco as they go into their next earnings release in December. And if you like this kind of analysis, check out the other stock analysis videos on my channel, which you can see on the screen now, and let me know in your comments below for what you guys like to see next.